Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is March 9th, the last one of the week, Thursday. So we are going to check out another one out of the healthcare sector. This is Pfizer. Let's jump right into the video. So Pfizer is a biopharmaceutical company started in 1849 by cousins Charles Pfizer and Charles Erhardt. Founded Charles Pfizer and Company in a red brick building in Brooklyn, New York. Founded in Brooklyn, New York back in the 1800s. So another one that's been around, right? They've seen it all, weathered the storms, the Great Depression back in the 20s and 30s, two world wars, downturns in the 60s, 70s, the gas price wars back in the 70s, 80s downturns, 90s downturn whenever we had the dot-com bubble, 2008 downturn whenever we had the big crash. Sorry about that. That's my phone. Turn that off. So we've seen one about every decade. We're probably in one right now. I believe we are in a downturn. How prolonged it will be, we shall see. I believe as long as the Fed is raising rates, we are going to continue to see markets pull back, which presents an opportunity. Whenever that red hits, that's whenever I like to buy. So don't freak out whenever you see red in your portfolio. Think of it as a buying opportunity, just like going into a store, seeing something on sale, and buying that thing that you wanted to buy anyway at a cheaper price because it's on sale. But let's get back into the video. 2022, fast forward to the present from 1849, Pfizer acquires several companies. Arena Pharmaceuticals, a clinical stage company developing innovative potential therapies for the treatment of several immunoinflammatory diseases. Now, another thing to keep into consideration whenever you're looking at pharmaceutical companies is their pipeline, right? Because a lot of these drugs will only have a shelf life so long where they have the patent and then they have to open it up to everyone else. So you want to see what else is coming down the pipeline. So that's what this is here. Pipeline snapshot as of January 31st, 2023. They have 34 trials in phase 1, 37 in phase 2, 23 in phase 3, and 16 that have already completed and are hitting registration. So for a total of 110 future drugs, right? If you want to know more about them, check them out, www.pfizer.com. And in my opinion, healthcare is going to be here for the considerable future. Baby boomers are getting older, so as people retire, they are going to need more and more drugs to keep themselves healthy. High blood pressure, with our weight problem in America, high cholesterol. I mean, all those things, they have a pill for it. People with hypertension, people with heart disease, all that stuff, there's a pill out there for it. So I believe these companies are only going to make more and more profits over time. Now, Pfizer is one of the companies I covered in my 3 stocks to buy in March. Pfizer. So this is the one. CVS was the other. Johnson & Johnson, all out of the pharmaceutical sector. Again, I thought there would be a big pullback here this month. Turns out that's exactly what's happening. So I've been adding significantly to Johnson, really looking at adding one of these two back into the portfolio, Pfizer or CVS. Depending on where it is, maybe over the next couple weeks, I'll probably pull the trigger on one of these, possibly, but there's just so many other buying opportunities right now. But if you haven't checked out that video, go ahead and take a look at it. Back to Pfizer, ticker PFE. They are to the healthcare sector, down on the day 1.65%. Closed out the day at $39.46. 52-week range as low as $39.31, so right up against their 52-week low, as high as $56.32. Average volume 22.5 million. Today was 17.9, and just a pretty steady sell-off throughout the day, right? Market cap of 221.728 billion, a beta of 0.59, so they are less volatile than the overall market, about half as volatile as the overall market. The one being the market, anything above 1 being higher than the market, anything below 1 like this one is less volatile. Price to earnings PE ratio is pretty low at 7.21. Earnings per share $7.21. Earnings per share EPS is sitting at $5.47 per share. Very nice earnings per share on this one. Earnings date coming up May 1st through May 5th, somewhere in that time frame. Forward dividend yield is $1.64 paid out on the year. They are a quarterly payer, so we will see that here in a minute, or you can divide by 4, do your own math there. And the yield currently sitting at 4.09%. Very nice dividend yield on this one here, over 4%. Ex-dividend date was January 26. We'll see the payout date here in a moment. And a 1-year target, at least according to Yahoo Finance. Not affiliated with Yahoo Finance, just where I like to look for some information. They say it could hit $52.06 over the next year. Now, I always recommend more than one source. So another source that I like to present to you is stockanalysis.com. Not affiliated with them either, just another one I like to look at. They present a lot of useful information. Statistics, for example, you can go and find their return on invested capital. That is a big one for me. Go in there and see how companies are doing, reinvesting their capital, whether that's buying back shares, whether that's buying other companies, whether that's just reinvesting into themselves in improvements and capital expenses. You'll see how well they're investing their own money, which is, again, very important in my opinion. You'll also see some things like their earnings growth and that sort of thing. So go into statistics. You can also go into their financials, see if their free cash flow is growing. Always want to find out these things, right? Dig a little bit deeper than this. This is just a real high level analysis. If you're interested in these stocks, you need to do your own due diligence here and figure out a valuation. I like free cash flow valuations, but there are a lot of other valuations as well. You could compare the PE to other ones. Another one I like, a quick one, is a dividend, 5-year dividend history, and you can see if the dividend is higher than its 5-year average. If it's higher than its 5-year average, that speaks to undervaluation. If it's lower than its 5-year average, it speaks to lower it speaks to overvaluation, right? So they call that the dividend theory, right? That is one way to look at it as well. But 29 stock analysts have taken a look at Pfizer. They have a low estimate of $40.40. Currently, it sits just under their lowest estimate. So if it comes back up to their lowest estimate, that will be a 2.38% increase in the stock price. Excuse me. Their average estimate is $53.10. That would be a 34.57% increase in the stock price from where it currently sits. And if it happened to hit their high of $78.75, that would be a 99.57% increase. And if you bought them now, all the while, you'd be collecting that 4+% dividend yield. Now, we mentioned it is a quarterly payer. They do pay out 41 cents per share. They have a low payout ratio, 28.6% here, but they don't have the fastest dividend growth at 2.55%. I would like to see this a little higher, and hopefully they do start to increase that. But as we saw in the first slide, part of this slow growth might be because they are still in acquisition mode. So they are buying out other companies. So that is a way for them to grow as well. So hopefully as they buy some of these other companies and see more growth because of that, they'll increase this dividend. They definitely have a lot of runway to go, but that's one of the things you can use free cash flow for: paying down debt, making acquisitions, paying out dividends as they do, buying back shares. You know, there's some several things that you can do with it, and one of them, like I said, I'd like to see this a little higher, but not terrible, 2.55%. At least they are growing that dividend over time. And with a 4% yield, I can deal with the slower growth with the higher yield. Well, that is really it. Trying to find value in the market anytime, and this is vested interest, anytime that I can see a company that I'm looking to buy above 4%, I'm going to cover it, especially when it pulls back on the day. This is one I, again, had on my list for March anyway, so thought I would share it with you. Hopefully you found value in the content. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell down below. Most importantly, hit subscribe to the channel and join me on this journey to financial freedom. Hopefully you are on your own journey as well. And if you have not started your own brokerage account and started investing, there is a Webull link. If you use that link, drop some money in Webull, start your investing account today. You'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. But dropping a comment down below and hitting that thumbs up and the notification bell and subscribing is another way to help. I do personally read and respond to the comments on the day I post videos. For some of you on older videos that are commenting, if I don't get to it, it's not because I'm ignoring you. It's just I do have a day job. I work for a living. I'm married, have 2 kids. So this is a hobby. I do not get paid for this. YouTube makes you have 1,000 subscribers and so many hours of content watched before you can even monetize a channel. So if you haven't subscribed, help me get to 1,000. Help me get to 1,000 subscribers so I can monetize the channel, and then maybe I'll have a little bit more time, and eventually I can quit my day job and just do this full time. That would be awesome. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. And I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. Thanks for stopping by. Hope you guys have a great day.